A homeowner in Ontario renewed their home insurance with their broker for $2,100 a year. 3 weeks later, out of curiosity, they ran a comparison online. The platform returned quotes from $1,680 to $1,890 for the same coverage from different insurers. The broker had checked 2 insurers. The homeowner thought that meant the market had been shopped. It had not. I've spent nearly a decade working inside the Canadian insurance industry. In this video, I'm going to explain why many home insurance renewals may not be fully shopped, what a properly shopped renewal actually looks like, and the 3 questions to ask your broker before you accept your next renewal price. Before I explain what goes wrong, I want to be clear about what this video is not. This is not a video about brokers being dishonest. Most insurance brokers are genuinely trying to help their clients. The problem is structural. It's built into how the renewal process works, and most homeowners don't know enough about the process to question it. Understanding why the renewal may not be fully shopped doesn't require distrusting your broker. It requires understanding how the process works well enough to ask the right questions. When your home insurance renewal date approaches, your existing insurer generates a renewal notice. That notice reflects the insurer's assessment of your risk profile, updated for any changes in the market, your claims history, or inflation factors, and it's sent to your broker before it reaches you. Your broker reviews that renewal notice. They may apply available discounts, loyalty discount, bundling discount, claims-free discount. They send you the renewal with those adjustments applied. What most homeowners assume happens next. The broker shops the renewal with every available insurer to find the best rate. What often actually happens, the broker accepts the renewal from your existing insurer without submitting your profile to the wider market. Why? 3 structural reasons. First, renewal commissions. Brokers earn a commission on every policy they place, typically a percentage of the premium. If you stay with your existing insurer, the broker continues earning that renewal commission without doing additional underwriting work. The standard renewal commission model does not automatically reward the extra time required to reshop every renewal, especially if the client is likely to renew anyway. Second, panel limitations. Most brokers have preferred relationships with specific insurers, sometimes called a broker panel. A broker affiliated with a major network may have access to 5 to 10 insurers, not the full market. When they shop your renewal, they are shopping within that panel, not with every insurer that would accept your profile. Third, the automated renewal process. For standard profiles with no significant changes, many insurers automatically generate renewals with minimal additional underwriting. The renewal arrives, the broker applies available discounts, and the process is complete. A genuine market comparison rarely enters the equation unless the homeowner pushes for one. A properly shopped renewal is not the same as accepting an automatic renewal with a loyalty discount applied. A properly shopped renewal means the broker submits your current property profile, updated systems, current claims history, current credit profile to multiple insurers simultaneously, compares the quotes on the same coverage terms, and presents you with the best available rate rather than just the renewal notice from your existing insurer. For a standard property with a clean record and no recent claims, a properly shopped renewal might return quotes from 4 to 8 insurers. The difference between the highest and lowest quote on the same property can be $200 to $600 in a single year. Over 5 years of staying with the same insurer without shopping, that gap compounds. Most homeowners never see those alternative quotes. They see the renewal notice, they see the loyalty discount applied, and they accept it because they assume the broker did the shopping. The fix is not to fire your broker. The fix is to ask 3 questions at renewal. Question 1. How many insurers did you quote this renewal? A broker who has genuinely shopped the renewal can answer this immediately. They quoted 3 insurers, or 5 or 8. If they cannot give you a specific number, or if the answer is 1, meaning only your existing insurer, the renewal was not fully shopped. Question 2. What is the best available rate you found? If the broker shopped the renewal, they have comparison quotes. Ask to see them. A broker confident in their work will share this without hesitation. If they cannot produce comparison quotes, ask why. Question 3. Is there anything about my current profile that would improve my options in the wider market? This is the underwriting question most homeowners never ask. Roof updated in the last 5 years, credit profile improved, no claims in the last 3 to 5 years. These factors affect how other insurers price your risk. A broker who has genuinely shopped the renewal will have considered these factors in the submissions. Here is the reframe. Your broker is not your adversary in this process. In most cases, they are doing exactly what the renewal process incentivizes them to do, accepting the renewal from your existing insurer, applying available discounts, and moving on. The problem is not broker dishonesty. The problem is that most homeowners assume the renewal process includes a genuine market comparison when it often does not. That assumption can cost several $100s a year for as long as the homeowner holds it. 3 questions change the dynamic. They signal that you understand the process. They give your broker a clear instruction. Shop this renewal, show me the quotes, and tell me what the market is offering. Most brokers, when asked directly, will do exactly that. Here is what that looks like in practice. A homeowner contacts their broker 60 days before renewal and asks the 3 questions. The broker submits to 6 insurers. The best quote comes back at $1,720. Compared to the renewal notice at $2,100, the homeowner saves $380 that year. The broker keeps the client. Both outcomes happen because the homeowner asked. Before your next renewal, ideally 60 to 90 days before your renewal date, contact your broker with 3 specific requests. First, ask how many insurers they submitted to for this renewal. Second, ask to see the comparison quotes they received. Third, ask whether anything in your current property profile would qualify you for better terms in the wider market. If the broker can answer all 3 and show you the quotes, you have a genuinely engaged broker who has shopped your renewal. If they cannot, you have 2 options. Ask them to shop it properly before you accept, or run a comparison yourself and bring those quotes to the renewal conversation. The link to compare home insurance rates from multiple Canadian providers in 3 minutes is in the description. Many home insurance renewals are not fully re-shopped unless the homeowner asks. Not because brokers are dishonest, but because the renewal process does not automatically require it, and most homeowners do not know enough to ask. 3 questions before you accept your next renewal change that entirely. How many insurers did you quote? What is the best rate available? What in my profile might improve my options? None of those questions take more than a 5-minute phone call. The answer could save you several $100s on a renewal you would otherwise have accepted without asking. The free homeowner checklist is in the description. It covers the property and renewal questions worth asking before every renewal, including the ones your broker may not bring up unless you do. If you found this useful, subscribe. I publish one of these every week. Everything I cover comes from nearly a decade working inside the Canadian insurance industry. See you next week.